Well, another week has passed and the focus remains on oil, and that will continue to be the case as long as the Straits of Hormuz are closed. But aside from that, we have got another busy week in terms of the economic calendar. This time around, we've got the US jobs report alongside the rate decision from the RBA. So let's get into the week ahead for the week starting Monday, the 4th of May. As ever, we're going to look at the economic calendar for the big ticket items to watch out for, starting on Tuesday with the RBA interest rate decision. And as we can see, coming off the back of a week full of, I would say, nothing burgers, but certainly the interest rate decisions that didn't see any movement, this time around, we're expecting to see a 25 basis point hike from the RBA. Alongside that, the ISM Services PMI number out of the US and the JOLTS job openings figure kicking off a week that is going to be focused on the jobs market in the US. The IV PMI out of Canada on Wednesday comes alongside the Australian balance of trade data on Thursday. And then on Friday, we've got the jobs report coming out of Canada and coming out of the US. So let's start off with the US. And we can see here that on Monday, factory orders, Tuesday, ISM services and JOLTS job openings, Wednesday, ADP, Thursday, Challenger and initial jobless claims, and then the jobs report. So a huge amount to get through, but really the theme is all around US jobs. And I guess the thing to say right now is that the US economy hasn't really been doing poorly throughout this crisis. Of course, right now, markets are fearful, but the US economy has been holding up well. And you can see exactly that here with the economic surprise index and the differential between the US and Europe widening as we go forward. So from the data thus far that we've been seeing, the US has been holding up well, Europe less so. And that's perhaps not surprising. Of course, the US has its own oil and gas industry, so it's not necessarily going to see the kind of shortages that we're seeing in Europe that are going to build. And at the same time, you're going to see higher oil gas prices, and certainly gas has been the one area where we've seen a massive differential because nat gas in the US has pretty much been flatlining, whereas we've seen a massive spike in terms of Europe. So sentiment certainly taking a hit in Europe as a result. In terms of the payrolls, thus far we've seen a couple of months of relative strength, but it comes off the back of a phase of weakness for the US economy. But certainly last time around looking pretty decent. And we can see in terms of market expectations for this current reading, 95K below where we are previously 178. But bear in mind, we could get a downward revision as well, which tends to be the case with the payrolls numbers as we have been seeing them over recent months. Unemployment expected to remain at 4.3%, average hourly earnings ticking upwards. But by and large, I don't necessarily think that's going to be the big issue. If you're thinking about inflation, you're thinking about oil and gas right now. You're not necessarily thinking about wages. In terms of market expectations, markets expect not much from the Federal Reserve for the rest of this year. And by and large, this is going to be a case of markets really pricing in what they do and don't know. There's a lot of uncertainty. So for people to say with certainty that they think the Federal Reserve are going to hike or cut, it's somewhat foolhardy. And certainly if we look back to the latest FOMC interest rate decision, we did see one member voting for a cut. That's Mirren. Of course, we have got Walsh that's likely to come into play as the new Fed chair. Jay Powell remaining on the board, though. So he's going to likely hinder and hamper Trump's prospective rate cuts with the idea that he's going to appoint another member to the board. And so by and large, markets expect that whilst inflation will go up, the Federal Reserve are likely going to sit on their hands and just wait for it to come down again. Remember, this inflation is driven by energy, and therefore you're going to see a major differential between core inflation and headline inflation. And so whereas the Fed likes to look at the core PCE price index, that's certainly not going to go up to the same degree as we are likely to see elsewhere in terms of the headline numbers. In terms of the markets, let's look at what's happening in terms of indices as a whole. Here's a breakdown across the board for European markets to the left and US markets on the right. And we can see if we zoom in to get to pretty much where this conflict started, we can see European markets lower than the beginning of this crisis. US markets either flatlining when it comes to the Dow or significantly higher when it comes to the S&P 500 and the Nasdaq. And that's because much of the strength recently has been driven by the tech sector, to some extent energy stocks as well. But really it's been a Mag 7 name, it's been a Mag 7 story, it's been a tech story. And so let's look at the Nasdaq, because this is the outperformer. And certainly if we do see relative strength in terms of the US economy, then I think that would be taken as a positive for US markets. You can see that we've seen some jitters recently. Of course, 4 of the Mag 7 names reporting on Wednesday, or having reported on Wednesday, a little bit of a mixed bag there. But you can see here that we've got through that, and price action has taken us close to the prior high. So again, we're going to be looking at this sort of stepped move higher in terms of price action, with a move through your swing low at 26875 required to start representing the beginning of a phase where price action starts to roll over. Until that happens, the bullish theme remains in play here for the Nasdaq as we head into a week dominated by jobs data. Next up, let's look at the Australian region, and we can see that by and large, whilst we have got a relatively busy week, really the main port of call is going to be on Tuesday, where we have the interest rate decision from the RBA. Now, what's different about the RBA compared to the other central banks here? Well, for one thing, you can see that they're looking to raise rates this time around, or expected to, whereas the other banks that we've seen on the week just gone all held rates. And for the other thing is, this wouldn't be their first rodeo, because they've hiked rates in their past 2 meetings over the course of February and March. And so that points towards why we've seen outperformance for the Australian dollar over the course of the past month, the best performing currency aside from the dollar. And we can see why. And the big problem here is inflation. Now, we've of course heard about the shortages at the pumps. So they are acutely affected by what's happening in Iran. And we can see here 4.6% for Australian CPI at the moment. So inflation, a major problem, and the bank having to try and react to that. You can see markets are currently pricing an 81% chance that we see a rate hike for the May meeting. Beyond that, are we going to see much more? Well, markets do expect another hike before year end. So really we need to sort of see a shift in terms of pricing for additional hikes or less hikes to see price action moving. But in terms of outperformance for the near term, I think there's a good chance that we do see a hike, in which case, of course, they're pricing an 81% chance. So that 19% that's currently priced for no change suddenly has to change to 0 if that's what happens, and in which case you would see likely some strengthening for the Australian dollar. And then you start to look at some of the commentary that comes around it to inform us over the likeliness of another hike to come. And of course, that's then going to shift expectations for the rest of this graph. So certainly that's how we're looking out for it. Potential Australian dollar strength coming into the fore, but certainly as we come towards the back end of this process and potentially see other central banks coming into play as potential hikers to come, then you potentially see their currency strengthen against the Australian dollar. In terms of the chart, the one chart I love to show you guys is the Australian dollar against the New Zealand dollar, and I'll show you exactly why. Let's just zoom out here. We can go onto the daily time frame. Look at that for a lovely trend that we've got here. So a beautiful uptrend in play, expecting to see more of the same, really, if we do see them hiking interest rates this time around. The 4-hour chart just gives you some granularity to that. And again, we're looking for that sort of stepped move higher in terms of price action. Here we go. Oh, that's not where I wanted it. So really, it's just a case of, as long as we break through the prior high, then you can adjust that swing low and utilize that as the area beyond which we would need to break to negate the trend. So a breakthrough 121 points towards a rolling over of this pair. But unless that happens, it looks likely we're going to see more of the same and more upside to come, in my mind, for the Australian dollar against the New Zealand dollar. And wrapping things up, of course, it can only really be in one place, and that is talking about what's happening in the Middle East. And we have, of course, Iran, and Donald Trump is warning that could last months, the Iranian blockade. Now, the caveat here, of course, is that we don't know. It could last 1 hour, it could last 6 months. And so the uncertainty does make for major volatility when we see markets adjusting to news that comes out, and we've certainly all been living through that of late. Major volatility each time that Trump tells us that we're on the cusp of a deal, and then it turns out that half the time he's making it up. But we've now kind of reached a point where his jawboning and his sort of his vocal or even tweeted intervention in terms of the markets to try and keep oil prices low kind of seems to have run its course. And so now we're sort of into a phase where markets aren't really listening too much to Trump and instead just thinking, how long is this going to go on for? And so now Trump seems to have run out of options. He either has to escalate or essentially leave and back down. It's unlikely he's going to entirely back down, but apparently they've been weighing that up as an option. Escalate, well, that could move into a military conflict once again. If that happens, then there's of course a risk of some of the facilities in the Middle East being targeted once again by Iran. That of course is a major risk for oil prices if they were to hit facilities, or if they were to hit the east to west pipeline coming out of Saudi, then that would of course lift oil once again. So there's plenty of potential upside, because the longer that this goes on, with each day that passes, it's further tightness, further shortages in terms of oil. And if we see an escalation, then we're likely to see further upside. So really, it's difficult to see where that breakthrough is going to come, because the red lines for Iran and for the US are so very distinct from each other that find an agreement where they both think they're in a position of strength that appeases both of their red lines, I just don't see where it's coming from. So this looks like it's going to run on for a bit. That means likely oil prices higher, even if nothing happens beyond the blockade. But if we do see military intervention, then we're likely to see a sharp spike in terms of oil prices. And the outlier to this is a resolution to the crisis, which comes at some point. But right now, I struggle to see exactly where it's going to come, quite frankly, but I might be wrong. And so I would say the base case for me is further upside in terms of oil. But of course, there is that caveat to say at some point we're going to see that resolution. And when we do, it's likely we see that snap back towards the downside for oil. In terms of what's kind of underpinning keeping oil prices relatively under control, we have been seeing inventories being drawn down across a number of different countries, like the US, the likes of Japan. But as those inventories are drawn down, so you can reach a phase where the outlined inventory drawdown that each country had laid out essentially is done, and they have to decide whether they want to do it again or not. And then you also factor in the idea that as these inventories completely dwindle, they're going to have to be refilled once again. So suddenly there's greater demand down the line from these countries as well, which again is positive for oil. So let's just jump into the chart for Brent crude to round things up. And we can actually see that towards the back end of this week, we've seen a bit of a pullback here, which is welcome, quite frankly, because it's all getting a bit worrying, certainly for anyone that's looking to fill up their cart. And we can see here 120, that key resistance level, we've sort of tagged it and heading lower once again. Are we going to see a sort of substantial move from here? I wouldn't necessarily think so. You can see the hourly time frame. We've got these selection of sort of lower lows. So, higher lows. So let's just grab this to here, and you can see roughly we've got this trend line support coming into play. Alongside that, let's look from a fib perspective and see how deep this retracement has come into. So we've come into the deep retracement zone between the 61.8 and the 76.4 fib. We've started to see an inkling of a bullish resurgence. I think there's a good chance we do see the bulls come back into play from here with a break through your 108.8 required to negate that view. Unfortunately, I don't necessarily see that resolution coming right now. And without the resolution, whether we see an escalation on a military front or whether we just see a continuation of the blockade, it points towards further upside for oil in my mind. I hope that's been useful. Make sure to like, subscribe, and follow for more. My name is Josh Mahoney, Chief Market Analyst at Scope Markets. Have a great day and a great week ahead.